Hello everyone, hope you are all doing good. So today I have come up with a quick video wherein we'll be discussing why market fell today. So nothing to worry, it's a small fall, but still so many of my colleagues, investors, everyone was telling that why this has happened and will this continue? Will this continue for long? Is it time to invest or is it time to be skeptical and stay in cash and wait for further crash to come? All these things. So we'll discuss quickly about all these things. So this I would mention mainly 4 to 5 factors which has led to a possible crash in the market. So Nifty has fallen more than 2%. Small caps also fell by around 1.8%. Sensex, everything fell. So if you see last Monday, FII had sold around 9,800 crore. Obviously, DII, domestic institutional investors, our mutual funds inclusive, had bought for around 6,600 crore. So yesterday it was a market holiday due to Gandhi Jayanti. So day before yesterday, FI again had sold for around 5,500 crore and domestic institutions had bought for around 4,600 crore. Again counterbalancing the market. Now guys, today FII has sold for around 15,200 crore, wherein domestic institutions has bought for around 12,900 crore. So again kind of counterbalancing the sell-off, but still the selling was so vigorous that the market fell so much. Now the $1,000,000 question, why the market fell? So first point is obviously Iran-Israel clash is escalating. Israel was already having issues with Hezbollah. After he's killed, now they are having issues with Iran. Both are crude oil producing nations. So if the crude oil price is impacted, it will highly impact the economies, emerging economies like India. So already the crude oil price has raised above $73 per barrel, and it was actually trading below $70 since a long time. Now that the crude oil price has increased, it has disrupted the supply chain of India because we are a major crude oil importer. So many of our products and our manufacturing, everything is crude oil based. If you see many chemical companies, including companies like Manari Petrochemicals and other petrochemical companies, are having raw material as crude oil. So if the crude oil price is escalated, then the sentiments on such companies are very much impacted and the stocks starts falling. So that is what has basically happened here because of the crude oil impact, mainly because of this escalation, the stocks has fallen down. Because now a bigger nation like Iran getting involved in this can really impact the economy, global economy, and hence this crash. Another major thing is Chinese economic stimulus. So I had put a short regarding this a day back. So almost 7.5 trillion yuan, which is around 1.07 trillion US dollar, is been expected to be injected into the economy, into the Chinese economy by the government through their banks, so that they get a good stimulus, because kind of since last 15 years the Chinese market is underperforming. I had again discussed in a short regarding this Edelweiss Greater China Fund, wherein that mutual fund has been highly underperforming because they are heavily invested in Chinese market. The fund has been giving very negative returns, and it is almost last many years flat. It is just 9% they have given returns, because last 2-3 years it is a big negative return which it has given. So to revive the market, what all they have done, the Chinese government. So if you see this 7.5 trillion yuan is equivalent to almost 6% of the total GDP of China of this financial year 2024. That big it is. Of which 2.5 trillion yuan is given out for debt servicing, cutting off debt of various institutions and organizations, and 2 new 800 billion yuan has been injected into the stock market as well by the People Bank of China, again to stimulate the economy or the stock market, because stock market is also considered as a kind of indicator of economic revival. So another stimulus is given by issuance of bonds worth 2 trillion yuan, again to increase the spending by the consumers and even the government, and to boost the government spending. And another 1 trillion yuan is given out to state-owned banks, again to increase the liquidity and to boost the economy and again to bring in economic stimulus. So all this strategic decision by the Chinese government has increased the liquidity, and also because of this stimulus packs, the Chinese market has been underperforming, and now because of this liquidity injection, the stock market of Chinese market has also gone up, which has probably induced the foreign institutional investors to inject money there. So if you are injecting money there, then lesser injection of money into Indian stock market. So many of the FIIs who used to regularly invest in Indian market has gone to Chinese market temporarily, because of which our market has fallen. The third case may not be that strong enough, but still the SEBI's rule of having minimum margin requirement for the F&O traders. So again, almost it is anticipated that almost 40 to 50% of the F&O traders will be eliminated from this game, so that it will again reduce the trading activity in the stock market, again making the markets to fall. Another thing is some microeconomical factors of India, like your GST the collection has been good, but it has slowed down recently. Again, the manufacturing PMI is around 56.5 this time, and it's a good value, but it has fallen to 8 months low in September. And also if you see auto sales, which is considered as a indicator for economic activity, has also slowed down. So this also is kind of indicating that our economy is slightly slowing down, but not to worry. All these factors, like your geopolitical tension due to Israel-Iran escalations, then your Chinese stimulus, again investors or foreign institutional investors flying to China, and SEBI's F&O rules, which keeps on coming in, which is good for long-term investors, I would say. And again, the macroeconomical factors like your GST collection, then your auto sales, all these things keeps happening. But in long term, our stock market is very resilient and strong. If you still see our economy is very resilient compared to all global economies. So to answer the final question, that should you sell off and exit our market? No, Indian market is very strong. It is yet to grow much higher. Next 10 years, as I always say, is belonging to India, is to be played by participating in India's growth story by investors like us. So not to worry, as I have been telling, because I had released a video 2 months back regarding US recession. So this is probably going to happen sooner or later. So you have to continue your mutual fund SIPs or some ETFs. If you are doing SIP, well, you have to follow that. You have to continuously, religiously keep investing in them. But it is also important that you should have enough firepower to invest if there is a crash. So as I told in our earlier videos as well, you need to sell off kachra stocks or non-quality stocks and some stocks which has already reached their all-time high, and if you feel there is no much strength or earnings power in that stocks, then you can partially book profit and have some 10 to 15% cash in your portfolio. And once going forward, you get a possible opportunity, I will not call it a crash, but a dip in the market. Then if you have identified quality stocks, then you have to get into that stock, so that only you should remember that real wealth is made in value investing only, not through growth investing. So once you get your quality stock in your watch list at a lower price, invest in them using this firepower of cash, then stay long term. So it is very important. Even while corona times, I always say, like, if you had some money, you should have invested, because the dip, at that dip, whoever has invested has earned much higher profits. So obviously the stock market keeps going up, small fall, bigger going up, then small fall, again going higher. So this keeps happening. But if you have bigger dips, it is always an opportunity for us to invest. So I'm not telling that the market is going to dip or something, but probably if you are getting some small corrections like this, it is time for you to invest in quality stocks and participate in the India's growth story. See you in next video. Till then, happy investing.